The trading week has just started and we are already seeing everything has started to roll over. But what actually happened and what is coming next? Let's break it down. So, over the weekend, geopolitical escalations continued to escalate in the Middle East with energy infrastructure being hit, Iran calling for retaliation about the energy infrastructure being hit, and Trump also ready to deploy ground troops as well. All of these factors they continue to escalate the geopolitical tensions, they continue to pour in more fear in the markets, and as a result of that we started to see oil prices hitting $110 per barrel level. I made a post earlier on Twitter about all of the situation. Let's go through it very quickly. Major infrastructure was hit in Iran, and Iran said that they are ready to strike back on enemy's energy infrastructure as well. Trump is committed to ending the Iran nuclear program and is ready to deploy ground troops if needed. And it is looking very likely that he will deploy ground troops in the near future. So, this is becoming a prolonged regional war now with no signs of stopping in the near future. And in response to this, oil prices spiked higher $110 per barrel on obviously supply disruption fears. And due to this, the US indices are getting dumped as uncertainty and inflation fears are rising globally. Obviously, because of rising oil prices, inflation is expected to rise even more going into the future. And at the same time, not only in the US indexes, but we are seeing a profit taking move in gold prices as well due to broader market sell off to tackle the heightened volatility, avoid margin calls, raise cash, and all of that stuff. So, if you are confused about the gold stuff, let's just talk about the gold stuff as well. I cleared this earlier in my videos, but I will clear it again quickly. The thing is that despite rising geopolitical tensions, initially gold prices were already expected to see some move lower. Why? The thing is that uh, the hedge funds, the institutions, the market participants, all of them, they have their capital allocated to all types of market. They don't only trade or invest in gold, they trade or invest in almost everything. And when due to any type of sudden panic, any type of sudden uncertainty or fear in the markets, when volatility rises too much in a very short span of time, market participants they start to face margin calls, and at the same time they also want to tackle the volatility, they want to cover their losses, and they also want to raise cash. Now to achieve all of these goals, what they do, they eventually sell everything which they own, including gold, including stocks, individual stocks, indexes, whatever they own. They almost sell everything so they can tackle the volatility, avoid the margin calls, and they can cover their losses and eventually raise cash as well. Okay, that's why whenever there is a initial or sudden type of panic, fear, uncertainty, or sudden spike in the volatility, instead of continued upside, we see some downside in the gold prices. The same thing happened with the Russia Ukraine war as well. The same thing happens with other wars as well. But afterwards, gold quickly stabilizes and continues its move higher as long as the other fundamental picture remains the same. Okay, so we remain bullish on gold, but I am eyeing a little bit lower levels before I start to buy. Why I remain bullish? It's not only about the geopolitical tensions, it's about some other stuff as well. Obviously, geopolitical tensions are playing a major role in this, but there is a lot of other stuff as well. Like the central banks, they are buying gold. The NFP last week, it was much better than expected. And again, you have geopolitical tensions. And at the same time, the inflation is expected to rise even more due to like the spike in the oil prices. And when the inflation is spiking, at the same time, you have some weak growth and you have a weak labor market. This is a perfect stagflation environment and a very bullish environment for gold. So, other than geopolitical tensions, there are multiple other key factors which are supporting higher time frame gold bulls. So, in the short term, you may see some continued downside, but I expect gold prices to soon stabilize and continue their move higher. Overall, I remain bullish and I am looking to buy the dip in gold prices. Not talking about the US indexes, actually the SPX, I remain bearish on the US indexes. I talked in detail about them in my weekend video. If you have not watched it, make sure you watch it. You can watch it after watching this video. But quickly analyzing the US indexes as well, see, you have geopolitical tensions, understandable. But at the same time, now you have a very weak labor market and you have weak growth as well. Now, these two things they suggest that you will be getting lower interest rates which the US indexes love. But right now, it's not only about the lower interest rates, right? Markets or the US or the stock market, it does not only need lower interest rates, but it also want to see a stable labor market and a stable growth, which we right now don't have. Okay, so due to this, the US indexes, the uncertainty is rising even from an economical perspective, not only from a geopolitical perspective, but also from an economical perspective. And this can put even more pressure in the US indexes going into the rest of the week. And I expect continued downside with first targets around the 6,500 round levels. Okay. Obviously, with geopolitical tensions, oil prices already spiking to $110 per barrel level and even higher. Okay, like the heightened volatility, heightened uncertainty, obviously, it is playing a major role right now. But again, I'm saying, other than geopolitical tensions, there are several other key economical factors as well, due to which the pressure on the indexes is expected to rise even more, or the downside pressure is expected to rise even more. But here is one important thing which many traders fail to see is that US indexes on their way down, they can see sharp pullbacks. Okay, they can see sharp pullbacks on their way down. So just don't go. I would advise you at least that don't go if you are looking for sells, don't go and sell midway. Okay, zoom out a little bit, mark your POIs, wait for your POIs, and then sell accordingly with pre acknowledged risk. Okay, because US indexes, again, as I told you, they can see very sharp pullbacks on their way down to avoid causing any type of panic in the markets. Okay, if we go on the daily time frame and see the tariff crash as an example, initially we saw some profit taking move which was followed by the tariff crash or the trade war. Okay, but on our way down we saw sharp pullbacks on our way down. Okay, so the thing is that with the US indexes, as I just showed you, you can see sharp pullbacks on the way down. So instead of selling in the midway, look for your POIs, mark your POIs, pre-acknowledge your risk, and sell or plan or and trade based on that. Okay, so for now, this was pretty much it. If there is any update related to the geopolitical tensions, related to oil, or related to anything, I will update that on my Twitter account and on my public Telegram as well. I will drop their link in the description. And the tool which I am using is the MRKT Research Terminal. If you want to try it out, I will drop its link in the description as well. You can check it out yourself. So this was pretty much it. Best of luck for the rest of the trading week.